Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at the technical charts and try to understand what happened during the previous week in the markets, and then also plan for a better trading for the upcoming week that's starting from tomorrow, May 19th, Monday 2025. So lots of things to analyze on, and let's get the charts first. This is the Nifty's view of daily and weekly. Left side is the weekly. Clearly you can see the reversal from the bottom of that trend line channel, and it's heading towards the top of the channel. That's very clear. When we had some pullback following the India-Pak tensions, and as soon as the ceasefire happened on Sunday, kept reversal from Monday, and wide range breakout is what exactly from the previous resistance zone is what has happened. In the daily charts of the Nifty, you see that it's heading towards it's almost near a resistance zone of the parallel channel, and yeah, parallel trend line channels are there in the weekly and the daily as well. That's what I see. On the Banknifty's case, that narrowing is ending wedge. Seems like it's heading towards the top of that wedge once again. On the Banknifty, right side daily charts of the Banknifty showing a parallel trend line channel, and a cup and handle breakout probably may be happening, taking it to another all-time high. So, in a nutshell, this is what happened following the ceasefire of India-Pak small war that came in last week. As soon as the ceasefire came in on Monday, market reversed and recovered all the losses, and 4.22%, that's 1,000 plus points, is what the Nifty has gained, and it is a 17.23% of pullback that earlier happened, being a 72% of rally from the June of 2022. Banking is also recovered and pulled back. It was 3.31, not as much as Nifty, but 1,773 points up is what you see after minor correction of 12.45, extending over several weeks or several months rather, during the bull rally from 2022. And let's try to see if something is there on the candlesticks. Definitely it's a wide range absolute bullish candle is what you see in Nifty, and again a wide range bullish candle is what you see in the Banknifty as well. No doubt about that, right? And remember that Banknifty on the right side had already made new all-time highs and heading to new ones now, while Nifty has some more to go. Another 1,000 points, 1,200 points to make the new all-time high on the Nifty. So candlesticks are absolutely bullish on the weekly, and the daily short-term small minor pullback can be seen on Friday, where Nifty had closed slightly negative. But if you look at the 5 days of move, you can see that the gap up breakout, the solid move on Monday, followed by some profit booking and then some consolidation and another breakout that happened on Thursday. That's the same thing that you see on the Banknifty as well. So absolutely candlestick wise, some small consolidation or pause is happening resistance on both indices, but week to week, each day's candle, if you see, it was a remarkable recovery that you can definitely see in there. Bollinger Bands are showing that it's an expansion on the Nifty on the upside, which indicates more further up move and is bullish bias definitely. Banknifty, it's contraction. The expansion has turned to contraction, but still having bullish bias. So that's on the daily Bollinger Bands. So Bollinger Bands are showing that it's having bullish bias, although there is an expansion confirmed in Nifty, but Banknifty is still contracting on the short term. Looking at the momentum and the trend indicators on Nifty and the Banknifty, left side you see weekly charts, and right side it's absolutely momentum has climbed in the bull zones and then rising up. So momentum in bull zones on medium term and long term. The RSI is what the momentum indicator that's used to understand that indication of that, and ADX is the trend indicator, which is showing that it is bullish as well. Right, so these are the details. So it's bullish and falling on the short term Nifty, while bullish and flat is what Banknifty is showing. Bullish and rising is the medium term charts are showing, while bullish and rising is what Banknifty also is showing on the medium term. So it's bullish momentum and bullish trend is what you see right now. And the right side you see the India VIX. India VIX is a fear on the good indicator. It just crashed 24%. That's when the war ceasefire has happened in the India Pac. So it has fallen from the 21-22 kind of levels to 16.55, but still it's high volatility. The tension has not completely gone down. It has not fallen back to the 12 or 10 kind of ranges. So a very remarkable cool off has happened on the Nifty, and that's when the market is moved up. So VIX has cooled off, but still not cooled off to the levels where we would look at below the 15 something. Right. Let's keep that in mind. There's some more fear that's left because of the Trump tariffs and the further escalations of the war and all this. That fear is what is reflecting. It's about 15 India VIX, but could crash. Open interest analysis is showing on Friday's build up a short build up of Nifty in the short covering. Not very encouraging futures on high from Friday. Open interest on the weekly expiry on the May 22 on the options is showing that the PCR is still bearish, not above the 1. You can see that. So one way of understanding the levels of the Nifty support and resistances and Banknifty support and resistances is from using the open interest. Based on that, 24,500 and 25,500 is where the highest put and resistances are seen. Put and call writing is seen in these levels, and 25,000 is where the second highest put and call writing is seen. Well, Banknifty 55,000 and 55,500, very narrow ranges where the highest put and call writing is there. Second highest put and however has got a 2,000 point range of 54,000 and 56,000. Rest of the details are the same. So open interest is not showing that great bullishness, right, on the futures and the options. As of now, but we still have many days to move. In order to find the support resistances, let's analyze with charts. Technical charts can also give you that. So this is the Nifty charts. So the first resistance would be the previous resistance zone at 25,345 range, and then after that you have a gap at 25,739, and then 25,859 has got a previous resistance, and then the all-time high 26,000 and 26,278. Downside, the first support would come in at the previous string lows at 25,000 would need to hold. That's the first support, and then 24,857, then 24,589, so previous string lows, and then Fibonacci 38 comes at 24,370. Then there is the 20 exponential moving average also coming close by at 24,329, and then 24,226. Again, Fibonacci 15 is coming at 24,000. So 24,000, 25,500 is what the things may be moving around. These levels are marked here. Make a look at that. The Banknifty also, it seems like a breakout from the cup and handle or the parallel channel. The first resistance would be all-time high at 56,000 rounding number, and then 56,99. After that, it can be anywhere 57,000 or 56,500. Likewise, it will be all-time highs levels. Downside for support will come in at 54,500, then 54,000, where the gap is also coming into play, and there is 54,500 has got a confluence of 200 also. So that's how it. So if you look at the levels are marked here, supports will be previous swing highs, 20 exponential moving average, gaps, rounding number, previous swing highs, rounding number, 50 daily exponential moving average, Fibonacci 38 levels, rounding number, previous swing lows likewise. So make a note of this. Look at these charts and then come back and see the levels, and then cross-check that with the options betting on for the next week riding, and then take your positions on supports and resistances likewise. Let's move and see how the sectoral indices have performed. IT, actually basically all of the sectors have remarkably moved up, especially the IT, reality and the metal and auto also. Substantial moves. IT is very good recovery of 6%, metal 9%, and auto has 5.7%, pharma has 2.7%, 2.5%. FMCG again, that's the least amount of up move that has happened in FMCG. FMCG defensive has not gone too bad when others are done really bad. And reality sector is a 10.9% up move. So it's a very good recovery, and overall the sideways and up move in the medium term is what is happening. So, but still you'll have to wait for some more time for all the sectors to climb and settle in the bull zones with respect to the momentum. You'll have to wait for that. The charts of these sectoral indices are shown here. We can understand that from you see that's all sideways rising. IT, sideways rising metal, sideways rising auto, sideways rising pharma, sideways rising FMCG, and sideways rising rally. Sideways rising and heading towards the bull zones is what the sector indices are all showing remarkable recovery week. The heavyweights that constitute maximum activity indices, those stocks, if you consider HDFC Bank, again close bullish momentum, rising up, absolute bullish. Lands, absolute bullish. It's a range shift and then breaking out. Solid bullish candle. HDFC Bank, all-time highs. It's a range shift in the momentum and then bouncing up, all with volume. So all three of these building blocks of the index is absolutely doing good. Now if we look at the IT stocks, they also have climbed the sideways zone after a long time. TCS and Nifty, both of them. And Kodak Bank is consolidating basically. It has moved down, but still momentum is bullish. ITC is set to climb the bull zones, but sideways and rising up, and probably a breakout from here towards the 500 levels could happen because it's a parallel channel. Breakout possibility seen in the charts, right? So absolutely everything has done well last week with respect to index heavyweights. Now global market index also have a solid breakout bullish candle, as you can see, and it's heading towards the top of the channel, and there's also just sideways rising up and going to hit the bull zones, right? So the move has been across the market, and mid cap and small cap index also is showing that. Now let's look at the institutional participation. FIs have done absolutely well, and they have been buying for 3 or 4 weeks now. 15,825 crores of buying in the cash, and domestic institutions also 10,000 crores of buying in the cash. The net revenues of the 5 years are moved on. Ignore that. Just trying to understand the currencies, global markets, and the commodities. Start with the currencies. Dollar has moved up. Rupee also has depreciated a little bit. 85.55, and dollar index is shown on the charts above. It had some very good pullback. Now it's consolidating. There is bearish. Otherwise, US dollar also taking us above the RSI 14, then trying to move back once again. This is the USD INR starts again. So rupee has appreciated lightly, but it's okay, considering we had a good pullback earlier on the dollar and the USD INR both. Crude oil is at good level, near to the 60-61 green, but still the pair zones is just momentum. Gold has good pullback, settling towards 320, but momentum is still bullish. Make note of that in the gold. The global market, if you see the US market is another market, so Dow Jones is done well with a solid bullish candle. Nasdaq also gap up and bullish candle. S&P 500 also gap up and bullish candle. So very good green week is what you see for the US market. So global cues are not that bad. That's in favor of the Indian market overall, if you see. Now let's talk about some actionables. These are not trade recommendations, but no educational purpose only. One is NBCC. It's a construction company in the realty sector, and seems like there's scope for it to further move towards the top of the channel. Channel is bullish, trend is bullish, and volumes are good. Hindustan Aeronautics is also a flat breakout, and also there is a potential rounding pattern breakout, which both should give 1:2 risk reward. Volumes are good, momentum is good, trend is also bullish. So NBCC, realty sector, and defense sector, Hindustan Aeronautics. Not trade recommendations, but charts that you should study. How long trades are taken. Right. Let's also see an F&O strategy in Nifty for the weekly. This is a Batman strategy where we are taking inside hedges for buying and double selling outside OTMs. Right. You can see that it's not completely hedged. If you want, you can buy some things on the call side and put side also, but that will reduce your profit. But otherwise, this is a very good range of 24,000 and 25,750. Right. And yeah, just get out of the trade if you are losing the breaking point. The market breaks out or breaks down beyond the break point, just exit that strategy, because that it's not completely hedged. Right. This is probably is good range. That's a big thing. It's a Batman strategy on the Nifty options weekly. Again, that's not a trade recommendations. It's all examples for educational purpose. Let's try to wrap it up. So market recovered after an earlier pullback and then closed positive following the India-Pak tensions cooling off, and momentum and trend had absolutely turned into the bullish zones, in the short term and the medium term. And FI has said buying for the third or fourth week, and the net. So remember that we had a rally of just 17.5 and 12.5 in the Nifty and the Bank respectively, but we had a rally. That's a correction that has happened that we talk about, but we had a rally of 70% plus in the last 3 years, less than that, 2.5 years. So right now, market once again had a minor correction and time correction also, and then heading towards making new all-time highs is what it looks like. We need to understand and come to a market view. Let's try to put together different factors that we analyzed earlier in the previous slides, and then put them in favor of the bulls and put them in favor of the bears likewise. So you see that more things are in favor of the bulls, definitely. US market is gross green, FIs are buying mode, orange bands are bullish biased, crude oil remains at low level, momentum and the trend indicators from both indices are bullish, heavyweight stocks are showing sideways and rising in momentum, both indices are above the 20 and the 200 exponential moving average, bottom market indices like mid-back and small cap they are also sideways but rising up, sectoral indices are also doing good, sideways are rising up, bullish candles have formed in major sectoral indices. And what's in favor of the bears is the fact that India which is not cooled off below the 15. Still it's high volatility, but it has crashed down substantially. Option is not that very interesting with respect to futures and options because PCI is also bearish. But overall, global tensions can score above the analysis. Keep that in mind. Volatility could come in if any escalation is blocked or the US tariffs turns bad again. Now, technically, it's also showing that it want to break out and then make new all-time highs. Volatility is there. Keep note of that. So market for the next week is mild bullishness is what you see. Right. So the range for the next week probably is 24,000 to 24,800. The range in the Nifty and 54,000 and 56,500 on the Banknifty. So as long as this 26,000 and 56,000 is not taken out, market is still probably pulling back or consolidating, etc. But at the moment it breaks out above that, there is a possibility that it can make the next leg of rally on the upside. So always hedge your portions, hedge your portfolio, and use hedging strategies for rental incomes. Check out the playlist for different videos other than the analysis videos. Check out that, and then you can learn a lot of option strategies and all that on Nifty and Banknifty. That's all I have. Thanks for watching. If you like the content, you can subscribe, you can like, you can comment your feedback and all that, and share it with others. I'm also active on the X. I regularly post technical analysis. If you want to subscribe, you can subscribe on that. Details are here. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.